Bean Counter's Learning Aids. Dave put on his thinking cap and developed some aids to help you understand and remember the major types of accounts, how they are related, and when to debit or credit an account. Major types of accounts: ALOE-RED Acronym A, Assets, L, Liabilities, OE, Owner's Equity, R, Revenues, E, Expenses, D, Draws, Dividends. The diagram is made up of two terms, ALOE and RED. These are the basis for the acronym ALOE-RED, which helps us remember the types of accounts. ALOE represents assets, liabilities, and owner's equity. RED represents revenues, expenses, and draws dividends. Associate these terms with a day at the beach when you get a red sunburn and use ALOE, the ointment, to ease the pain. Dealer acronym D, draws dividends E, expense. A, assets L, liabilities, E, equity R, revenue. The term dealer uses the letters to help you remember the types of major accounts. The first three types of accounts on the left are debit balance accounts, DEA, debits on the left. The last three types of accounts on the right are credit balance accounts, LER, credits on the right. The first three types increase with a debit and decrease with a credit. The last three types increase with a credit and decrease with a debit. Major types of accounts and relationships. Green represents debit balance accounts and red represents credit balance accounts. The relationship between balance sheet permanent accounts and income statement. Temporary accounts shows how profit or loss is transferred to the balance sheet owner's capital accounts. What does the diagram tell you? 1. The major types of accounts or categories are assets, liabilities, owner's equity, revenue, expense, draws, charges, dividends. 2. All accounts have a normal balance, which is either a debit or credit balance. 3. Accounts with a normal debit balance are assets, expenses, draws, dividends. Accounts with a normal credit balance are owner's capital accounts, liabilities, revenues. 4. The balances in temporary accounts are transferred, closed, to the permanent owner's capital accounts. 5. Revenues minus expenses equals profit or loss, if revenues greater. Expenses equals profit, if expenses greater. Revenues equals loss. 6. Assets equal liabilities plus owner's equity, which is the basic accounting equation and the basis for the double-entry bookkeeping system. Debit account, balances equal credit account balances. Debit-credit diagram presents the major types of accounts and the effects of debits and credits on the account's balance, increase or decrease. Debits, increase assets. Expenses, draws, dividends. Credits, increase liabilities, owner's equity, revenue. Debits, decrease. Liabilities, owner's equity, revenue. Credits, decrease. Assets, expenses, draws, dividends. Revenue, increases. Owner's equity, expenses, and dividends, draws, decrease. Owner's equity. Debit-credit flow chart. Based on the type of account and whether the account balance increases, the diagram guides you to whether you debit or credit the account. Hope these learning aids help. See you next session.